Hi, I'm Bill Baruch, president of Line Captial, and I'm here with our analyst, Jannis Meindl. And this is the Triple Play Podcast. We're excited to be back this week. I know it's been a couple weeks since we've given you a podcast, and we're having one for you next week lined up. And it's been a little chunky throughout little choppy throughout the summer, but we'll keep them coming. We'll start give you as much information as we can. We're excited for this one. There's a lot going on in the markets. First, just broadly speaking, we've seen a massive move in tech driven by AI, and we're going to touch on semiconductors today. So that's exciting. But first, the global macro, sort of the macro look. The data this week has just continued to be lumpy. I've called it lumpy for a bit now. You get things like New York Empire State Manufacturing falling out of bed. Then you get Philly Fed. It's less worse than expected. Some jobless claims not as bad as expected. But really, Friday was the big part of the week. And, we had Fed Chair Powell talking at a conference, a Fed conference, and as well, the debt ceiling heading into the weekend. So we've finally begun hearing some of these Fed members take a more hawkish than expected tone and then begin pricing in that potential of a June rate hike. It was underpriced. I've been talking about that in some of my work elsewhere, where it was 10 to 20% and needed to jump up closer to maybe a 50% chance that they could hike in June. Some of the comments from Fed members, like a Dallas Fed President Logan, you got Bullard, some others that reinvigorated that probability, got as high as almost about 40% this week before the debt ceiling deal fell apart on Friday. And surprisingly, Fed Chair Powell as well held a ultimately, sort of middle ground, very prepared comments on Friday. Some could arguably say less hawkish than expected. And that's where we went into the weekend. I think it's an exciting place to be. And you know what, Jannis, what do you think? What's your take on that?
Yeah, exactly. A lot of lumpy data, a lot of back and forth, not really a clear direction in a lot of ways. But I think one of the things that people keep talking about and that I just wanted to highlight here today is inflation and whether it is still an issue. We look at CPI, we look at PPI, we do know that there is this massive lag of shelter within CPI that everybody's waiting for to finally roll over. We will get that most likely during the summer months. But just looking at the cleanest measure of inflation without those seasonal adjustments, without the gyrations within the data, we look at import and export prices. There's no adjustment made to those. So this is a real-time measure of where prices stand in this economy. And we do see that in April, import prices were down 4.8% year over year, and export prices were down 5.9% year over year in April. So we do see that inflation has come down significantly, and now the conversation will really be about growth, productivity, and whether there is enough force in this economy to ultimately see real growth return as inflation comes back in. So that's really the only thing I wanted to highlight. Check out the chart book. There are a lot more slides in this presentation today, but I'll kick it over back to you, Bill, already.
Yeah. Always a great chart book. Always remember you can check this out and really kind of follow along with what we've talked about. Great stuff, and then you put together there in that, Jannis. And you're right. I mean, inflation's slowing. That's a big narrative. CPI forecasting from the Cleveland Fed, looking out to that May number that will be released in June, pointing to 4.13% headline number, I think it is. So it's trending the right way. And that is a tailwind here for what tech has done. Certainly has been a tailwind, but it's by far not the elephant in the room, which is AI driving semiconductors. NVIDIA's been the huge one that really got the ball going in the space. And a rising tide can really lift all boats. We've seen even some of the really big trailers, some of these semiconductor companies that are trailing the narrative even start to show up, like a Western Digital that we're covering here today had a big week. And we're positioned at NVIDIA's for a while was our largest position. We've been continuing to trim it. I mean, at what point now they even were at $300 a share there. At what point is it just a little too much risk heading into earnings next week? We're getting NVIDIA earnings next week. So we brought NVIDIA down to it's about number six size in our portfolio next to AMD. Micron's still up there. We like the cyclicality with Micron and the way they've measured expectations. At the end of last year, just I think terrific. I think there's a lot of upside there, and we got some parallels that we're covering today. Within that narrative of Micron. We'll get to it. But big week really got going. I mean, it got a lot better. It was a big week that got a lot better after Synopsys reported earnings after the bell on Wednesday. They beat and raised. And Synopsys, about a couple weeks ago, it's been in our portfolio since 2021. And it set a record high. And not many tech names set a record high in summer of 22, summer of last year. I think it was July. And most tech names were making new lows at the time. Synopsys, they are a leader within the electronic design automation. They basically touch just about all chips. I mean, they are the leader within the space. So for them to come out and report earnings, not only beat really well, raise guidance, and I think that speaks volumes to the direction of the space. I mean, obviously, again, many tailwinds, but that quietly was one of the largest tailwinds on the week. I think that went very unnoticed. So Synopsys did that. I mean, we've been hearing great earnings across the board. So with that said, let's jump in here with Western Digital to start off. Western Digital, these numbers, are not good. I mean, they really, very, very cyclical type business. I mean, you're talking, hard drives. You're talking this is a space here that's going to be a little difficult to compete in this environment right now. Micron is our horse in the race in this specific side of semiconductors. We really like that name. And again, they raised, they set the expectations very well last year. Looking at Western Digital, next 12 months multiple at -9 and 9.8. It is less worse than trailing -17. But free cash flow yield down 10%. Next 12 months, the revenue is set to decline in 2023 by 35%. That was after increasing by 11% in 22. So, their reacceleration though, in 24, free cash flow margin expected to decline from 4.1% in 22 to -12% in 23. But this is it. This is what was expected last year and why a lot of the names in the space were just beaten down. But with their major focus as well on providing to hard drives to PCs and within that space becomes very difficult. A lot of purchases, the narrative, a lot of purchases in 2020, it becomes difficult to compete with those numbers year over year. But that's why 2024 becomes even more important. Jannis, what do you have to add about this? I know you've done some terrific work here on Western Digital.
Yeah, absolutely. I would first of all echo all these points. You have a business that's extremely cyclical. Also, they have expanded there as a percentage of revenue. That hard drive business has expanded. If we look at 2020 compared to 2022 numbers here, you can see it right here on the chart. In 2020, it was only for 46% of revenue. That's gone up to 52, and that is more likely than not a secularly declining business. So you need to be aware of that, and it's a whole lot more cyclical than some of the names we have talked about in the past, given that the business of hard drive, but also flash memory is not nearly as differentiated as, say, a Synopsys, as an NVIDIA really manufacturing those high-end chips. So you want to be aware of that. And just looking at the broader trends of the industry, a lot of these trends are really similar across these names, where you have this massive inventory build on the back of supply chains clogging up in 2020 and 2021. So with inventory building up as far as their customers are concerned, right now they're running down that revenue. But what does that mean? They ultimately are building the inventory on the side of Western Digital, and you can clearly see that in absolute terms, but also relative terms as a percentage of revenue. So as that's happened, pricing has come under significant pressure on the NAND side. We covered that when we talked about Micron, both on the DRAM and NAND side. So pricing under pressure, that compresses margins. And despite them cutting back capital spending, meaning not investing as much in the manufacturing of these chips, which you can clearly see here coming into the fiscal year 2023, up until right now, their CapEx estimate is half of what it was. So significant cutback there as far as their outlook is concerned. But despite that, the cash flow from operations has gone down significantly because it's an extremely capital intensive business. And as pricing comes under pressure with less customer demand, with all the customers running down inventory, you need to see that cyclical upturn again on the back end of this time. The question really is, when will that happen? Because this is more of a commodity type business, not as differentiated as, say, an NVIDIA. therefore not really getting that same AI boost as an AMD, as an NVIDIA, as a Synopsys. So it's a cyclical name. It's had a lot of challenges. I know, Bill, we talked offline about the involvement of Apollo and Elliott Management. What does that mean? They own convertible debt in the name, so not really equity just yet. That can happen at some point. But yeah, cyclical business, not really that differentiated, and despite them cutting back, their margins have gotten suppressed significantly. So coming out of this, we'll see what the strength and breadth of this recovery will be, and that will really determine the outlook for the stock.
Yeah, and you get the activist management. We've seen a lot of terrific responses with activist management this year from a Disney, from a Salesforce. So I know a lot of people too that we are close with, colleague wise, just other companies, and they really prefer this name. Again, Micron is our exposure, and we have strong exposure to Micron. We really like that name quite a bit. Now, from a technical standpoint, it's pretty clear where Western Digital, where you want to be buying it, as it approaches that $30. It's going back to that 98, 99 bubble area where it actually got above 40, but spent a good amount of time between $30 and $40. That's highlighted within that rectangle. It's also the 618 retracement, so it stuck its nose down there below that 618. It's responded. You actually have a bit of an inverse head and shoulders. So, and a lot of these names did this inverse head and shoulders type thing, and maybe just at different points throughout the last 24 months, where you had these, maybe the last 18 months, you these big sell-offs, and then you kind of stabilize, one more gap down, and kind of stabilize here through this first half of this year with the higher low, and that does also really help propel from a technical standpoint. And so I think really good week here of Western Digital. A lot of stocks traded pretty well in the space. Is this the start of something more? It's tough to say. It really is. It's again, we have a lot of strong hopes for Micron. Western Digital will probably perform very well if Micron was doing good. I think you got to see it above $50 to really get it out of this hole and sort of repair all that damage. Let's move on though. Next one up here is Lam Research. This is a much different name than say Western Digital. Now, for starters, you got a positive multiple. Positive 25 is next 12-month multiple. Trailing is 16. And I'll touch on that trend a bit when we move on to Texas Instruments, which is the third one. But so for Lam, next 12-month free cash flow yield positive 5.2%. So the revenue growth, obviously, it's slowing from 22, set to slow from 17.8% 22 to basically not even percent, 70 basis points in 23, and then even further in 2024, negative 17%. Free cash flow margin is set to increase from 14% in 2022 to 31%, but set to decline again in 2024. It seems that Lam Research, some of the more hopeful tailwinds for some of the other names, you're starting to see some decline forecasted out there in Lam Research, and that's probably a little bit more of a byproduct too, where declining margins as well. You got from 33% in 22 to 32% in 23, and declined further to 31% in 24. Memory is their big part of their business, and that negativity around memory is really another sort of pocket within this space. There's an all-time low of investment within that, and ultimately because no one's buying. I mean, that's where we're seeing that forecasted. But the stock has performed extremely well in recent weeks. We'll show you the chart in a bit. Their foundry business is really what it is. Ultimately, what you want to think of is this company manufactures and designs the equipment used in the fabrication of circuits. So their foundry business, they had a record dollar level in revenue in the March quarter, representing about 46% of the revenue. So when you look at it too, China and Korea are about 22% of the revenue each, but they combine about 44% of their overall revenue. So foundry business is important, as well as Asia. And so the real question, potential here is what type of restrictions are going to be going on with related to China, and the impact is seen as potentially $2 billion to $2.5 billion Lam. So there's obviously some questions there. There's a lot of tailwinds behind this stock right here now, though, too. Jannis, what's your take on it?
And a really interesting name here with Lam. You noted the export restrictions and the impact of that. That is the restrictions as they are in place right now. So any follow-on restrictions, one should monitor as an investor in the stock if you are one. But ultimately, with their heavy exposure on the memory side, a lot of it relates back to what we talked about with Micron really being one of the first semiconductors to cut expectations for investors, to cut back. All the different competitors followed them, and that directly impacts Lam Research and their provision of these tools, as well as they have moved from being an equipment provider to also being a service provider.
And not to interject, I hate to cut you off. That is such a great point, though, Jannis. And one of the things that I will never forget, going back on when Micron reported at the end of 2022, it was the second to last week of the year. The CEO came out and they had lowered their expectations, and they said they hope that their competitors are going to do the same. And it was an awful report from Micron, awful report. But they set the stage for this months ago, the prior quarters. The stock, just right after the report, traded down maybe 2-3%, finished the next day up. It was Lam Research. It was other names within the space that were down 5% after that report. So sorry, Jannis, for cutting you off there, but that's just, you remember things like that when you're involved in the markets, and there's stuff that has to be make an imprint in your brain. You remember those things, and those narratives they're going to help you invest going forward too.
Absolutely. Fantastic point. I mean, with a lot of these companies cutting back the capital spending projections, that's really has been on a business level, on a revenue and income level, really negative for Lam Research, but also the performance of the stock shows us that there is an expectation that ultimately we will see the other side of this, as we also see it. I mean, a lot of the themes in semiconductors being really similar. We see an inventory build the same way that we see it with that we saw with Western Digital. We also see that with Lam Research. So inventory's gone up significantly. Ultimately, their margins are a whole lot more stable because they provide the equipment rather than manufacturing a lot of the different chips, so not nearly as capital intensive. But yeah, I mean, a lot of the different names in the semiconductor space are differentiated. So we need to find the nuances here. But great point with the memory.
Yeah, and you see here this name from a technical standpoint, it's moved up really significantly. Now it's at a place I like to look, ultimately where has shares changed hands. I mean, price has memory, and you look at this, $600 is a very significant. Not only did it really just come down hard in 22 when everything really started rolling over, Lam Research came down very hard, and I think there was after selling off for a week, it was also a really bad earnings report that really kind of took it down to the next level. We're coming into that gapping area. We're coming into a lot of volume where it changed hands from the prior year as well. So it's I think an interesting area. Very strong week, very strong move. Can it continue to set those gains? And the tailwinds, it's a rising tide could lift all boats. And so even though Lam, it may not be the headline of the week, there's definitely some tailwinds that can lift it through some resistance. And that's one of the interesting points I also believe with the space in general right now is there are so many positive narratives, whether it be, a Micron narrative laying the landscape and pricing out to 2024, whether it be the AI that's the real driver here. And just broadly speaking, all the earnings are set to be looking better 24. And a lot of these companies too, their fiscal year 23 is ending, at the end of June or at the end of September. So when they're talking about 24, they're actually talking about the end of 23. Another thing to really think about with this too. So a lot of interesting narratives to really hit on here. And we'll wrap up with Texas Instruments. Now, this is another stock like Lam, next 12-month multiple at 22, though their trailing is at 19. And if you've been following some of the narratives we've been talking about, especially January and February, looking for names where the next 12-month multiple was lower than the trailing 12-month multiple. And still, that was, something that we'd factor into being a buy signal, or at least within the way we were looking at these stocks. Now it's a bit different. These names have rallied a lot. and their earnings are being projected lower. They're lowering that landscape, the haves and the have-nots, those companies that have lowered those expectations, companies that have not. And we're starting to see that. So higher prices, lower earnings, that's already baked into the cake is actually starting to flip the narrative a little bit, where you have these higher multiples the next 12 months compared to the trailing. Something to keep an eye on there. Free cash flow yield is 2.4%. Nothing terrific there. Revenue growth set to slow, 9.2 in 22 to negative 10% in 2023. So, ultimately, I think again, there's a lot here to unpack within a name like Texas Instruments. Now, there's definitely bear cases and bull cases. Now, they manufacture and sell semiconductors designed and manufactured in the United States and internationally. Now, they have the analog segment and an embedded processing segment. One of them I think is really interesting here, the analog segment. But before I jump into that, their analogs, Texas Instruments' ability to manufacture analog parts on 300 millimeter silicon wafers has given the company a robust gross margin expansion in recent years. And the analog part is something that I want to kick into you to discuss further and give us some explanation there. But on this bull case here, at least the bear case side of potentially the analog potential is I think a really interesting part for the bull case. But and that's 50% of their business, I believe 50%, and you could confirm that. But now, if again, same case of China and U.S. trade tensions continue, China may gravitate to competitors in Europe. So there are competitors here, like NXP, to keep in mind. If that is like Lam and a lot of these semiconductors names, that's the major headwind you got to pay attention to. What goes on with U.S. and China trade talks? There's actually some trade talks taking place at the end of last week to this weekend. It's going to be in the headlines. Keep a pulse on that. It's going to be something that could be a headwind. It could be a tailwind, but I mean, if more likely than not, it's something that could slow this run down a bit. But Jannis, why don't you tell us a little about these analog chips?
So when we talk about Texas Instruments, we cannot ignore this analog segment, which is the largest chunk of their revenue. So what we really talk about when it comes to analog devices and the semiconductors within these devices, it's really a semiconductor that absorbs nature and the environment around the chip and takes that natural signal and converts that into a digital signal in order to command on the device substrate, basically. So if you have a temperature measure and it measures the temperature in the room, that semiconductor then sends the signal to the AC, telling the AC how to regulate the temperature in the room. That doesn't only apply to simple applications like I just talked about. It also applies within industrial robots, all the different industrial applications. Just before we hopped on this podcast, we talked about the onshoring and friendshoring trends, with a lot more manufacturing capacity expected domestically or more locally at least. So that's been a major tailwind for Texas Instruments, the same way it's been a tailwind for a name like Caterpillar, which has recently sold off though. So a lot of these international and geopolitical trends affecting Texas Instruments extremely closely. And this, of course, with that tremendously high exposure to China, with 50% of revenue coming from their trade talks and restrictions around exports of semiconductors, will be extremely significant for this name. They have a dominant position in analog devices. They are the leader in this space, but to what extent is that, first of all, priced in as far as friendshoring and onshoring goes, and to what extent will geopolitical tensions affect that name going forward is the real question here, and that's what I'll close it out with.
Yeah, and before we jump into the chart here, one thing to highlight: Texas Instruments is seen as it's the value play within semiconductors. It's the name many value investors hold within their portfolios. It also pays a dividend to about almost 3%. So it's definitely has a spot in the value portfolios to cover the semiconductor space. And you can see this kind of here with the chart. A little less volatility than the others, sort of more of a consolidation range at the top. As I was looking back at this chart and getting it ready for the podcast, I noticed the 200-week moving average. Now, people don't really follow that so much, but Texas Instruments since 2010 has not been below that 200-week moving average. I think it's something to keep an eye on as we tested twice throughout last year with a higher low and holding ground overall. It's rising into where it's recently been. So I would use that as an indicator that if we don't break below that 200-week moving average, this stock's likely to make a new all-time high. Bill Baruch is the founder and CEO of Line Captial. All opinions expressed by Bill and podcast guests are solely their own opinions and are not intended to provide specific advice or recommendations. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Understand your financial condition before investing. Line Captial, its staff, or its clients may maintain positions in the securities discussed in this podcast.